Hello, good evening, everyone. Welcome to all of you for today's session. Students, just let me know whether you people can hear me well. Can you hear me well? Am I audible to you people? All right. So, AAA, the paper, which is actually a nightmare for the ACCA students, and the reason is they focus knowledge, they focus everything. That's why they suffer. They suffer because they want to focus everything. Okay, so hence they face the problem. Now, my approach for you people in the remaining days will be here. The approach should be we need 50% marks. So we need to focus total 100 mark paper, and out of that 80% are technical marks, right? 20% are professional marks, right? So 80% technical marks include, it includes around 65 mark paper, 60 to 65, which is predictable every time. And so 60 to 65% of it, professional marks as well, which are linked with it. So if you add from 60 to 65% from here, so 13 marks. So this is around 78 to 20 mark paper, which is predictable, which is repetitive. Students normally think about fancy and the latest topics and they get confused and they spend, remember, those topics, the name you must be hearing, and I will be discussing tomorrow the sustainability topic. Of course, I will be talking about that. This is everywhere there is a noise. Maximum it can be tested for 15 marks. Maximum. Rather, its chances of testing is 10 marks only. So the whole focus is here. Everyone is talking about examiner article, sustainability, and examiner articles. So they weigh in your exam around how many marks? Total maximum 20 marks. So you ignore 80 marks, out of which it is very easy to score 50 marks. So you continue, talking about these marks. I'm not saying to ignore that completely. I'm saying the effort you need to put. When I know there are the accounting issues in risk of material misstatement question must to be tested. When I know there is justify why an issue is risk of material misstatement. So two types of question on risk of material misstatement. Remember, 1 and 2. So one of these two is mandatory. Sometimes both. Around how much? How many marks? 20 to 25 mark technical mark. Effectively, it is 30 marks. Why don't we spend time on it? Why don't we ensure that out of these 30 marks, I am going to get 30 out of 30? Why not? Then business risk. Around almost 10 technical marks are there, 8 to 10 in every paper. So if we do, that will be means professional marks include, it will be 13 to 15 marks. So how many? 45 marks. You see. So 40 means 40 to 45 marks. 40 mark paper which is repeated. How many questions you have written on it? Tell me. How many questions you have solved and marked your answer so far? Tell me. Ask yourself, hold yourself accountable. Then there is topic, that's audit procedures, which is tested in the question 1. Normally around 4 marks to 10 marks. Technical. Then there normally mandatory. Either audit procedure will be there or there will be ethics and professional. Ethics and professional issues. Ethical and professional issues. So you must have to face these questions either in the section B as well. You will find a question on audit report or review mandatory in the section B, around 10 marks, minimum 5 and 10. You will find one question mandatory on quality, either quality management or ethics, which I have already given. Normally both are tested in every paper. How many questions on these top scenarios you have drafted the answer under exam condition, marked your answer? Tell me. Can you tell me by closing your eyes that in ethics question, if I'm solving the answer, what are the essential ingredients to be considered, to be written, so that I get maximum marks? Can you close your eyes and tell me on your fingertips? What are the matters which I must include in business risk discussion? How many types of audit report questions are there? Can you tell? And how marks are distributed? And can you recall? If not, it means you are actually confused about exam strategy. So this session I have arranged with you to open your eyes. That there is nothing which can prevent you from passing a paper if you do focus 80% paper right now from today. Today you have 12 days from today onwards. In 12 days, you can focus on the section which I have identified. And you can pass the paper, I'm telling you. 3 hours daily. Start spending from today. You need knowledge. Knowledge is needed from the area audit report. You must know what is the report, what is type of report, under which circumstances it is given. Each type of report. What is key audit matter, under which circumstances its components. You must have knowledge. You must have sound knowledge of ethical issues and safeguards. You know the safeguards? Safeguards are there for certain and specific ethical threats. For example, there is a limit of 15% for 2 consecutive years. That your fee income, if you are a listed company, your fee should not be more than 15% for 2 consecutive years. If this is the case, it is ethical threat. And you must have to conduct pre-issuance review of your work. So this is clear knowledge. You cannot write generic answer for it if this issue is tested. Same is the case with the so many other points in the ethics. The problem with the student is that they don't prepare well this knowledge even. They're try to write generic answers. When you write generic answer, generic safeguards for which there is specific guideline available. So this knowledge is mandatory. And then after this knowledge, its application to scenario. How to write answer. This is mandatory. So there is no rocket science that now how to apply to scenario. You need to learn it, practice it, and that's it. Okay, now So this is basically a shortcut to pass your paper if you do. Now, so I have given here, that the quick way. I told you people during this session, even I created some videos as well, that business risk, when you are explaining, it should have each business risk explained should have three components. First of all, that condition or issue from scenario, which you think will cause the business risk. Second, you must have to show that evidence from scenario or practical ways how it may become a risk for the business, how risk may arise from it. Either from the scenario, some information may be given over there, or practical, which we call commercial acumen. Practical way that how foreign exchange transaction will become business risk. How? Everyone can think a company is expanding internationally. How it can become business risk? Company is acquiring a new company for the first time. How it can become a business risk? Can't you imagine? Operation and large operations, same management, first time acquisition, and they may not be able to manage it. They don't have experience of managing it, and hence operation may deteriorate. So you see here, and then impact on business. What will be the impact on business? In the form of cash flow, in the form of profitability, in the form of liability, in the form of assets, devaluation, asset loss, cost increase. So this is 1, 2, and 3. So each business you are writing and you are discussing it from the scenario. And fourth point, do try to discuss severity of the matter, because when you condition you are discussing the facts from scenario, and you can discuss how severe it is, how much amount is involved, what will be the impact on the business. Be practical. Not every risk becomes a risk to the going concern. Write down. Some students do this blunder, they take everything to the going concern. No, every risk is not, every disease is not life threatening. We can't say that. So this is the business risk. Then I ask students, if you write a business risk like this, your each business, so you are sure shot going to get 2 marks, but plus you are discussing the scenario. You are actually writing the commercial acumen as well. Analysis and evaluation skill is already there because you are discussing the scenario properly. Okay, now the next becomes the risk of material misstatement when they say prioritize and evaluate. Evaluate and prioritize. So, risk of material misstatement, I ask my student, your first priority should be over here accounting issues. Because no one can deduct your mark when you are discussing accounting issues as a risk of material misstatement. Accounting issues where IFRSs are involved in the scenario. And I say MTI. Simple apply. That whether the matter is material by amount, if amount is given, by nature, not, if not given, you can say we cannot determine the materiality. Then treatment has two legs. What IFRS says about that aspect only. Only that aspect. You have not to discuss anything unnecessary. Only that particular aspect which is given in the scenario. If it is revaluation, so revaluation means that You have to write what IFRS say about the revaluation. If it about the useful life revision, only that. If it is about the capitalization of cost, only relevant chunk from IFRS. You have not to write the whole IFRS over here, only relevant chunk, and then apply that to scenario. And then apply that to scenario. That what they have done. Now apply that to scenario has further two over here. I say further two chances that they have given in scenario. In scenario, sorry, two chances are there. Given treatment is incorrect, clearly incorrect treatment done, or given scenario is silent. Scenario is silent. Two possibilities are there. If scenario is silent, you will discuss here that they may have done incorrect treatment. What should be the treatment? What should be? And risk. But if given treatment is incorrect, justify why it is incorrect. Why? And how to justify utilizing what you have explained here, what IFRS says. Utilizing that. Each and every point. Why the revenue, why the outflow is not probable here? Why they should not have recorded contingent asset? Because it is not virtually certain. Because there is no clear intimation from the insurance company that there is no clear intimation that they will pay it. It is general discussion only. So it is not virtually certain, so must not be recorded. Incorrect. And then I, afterwards, what is the impact on financial statements? Now, impact on which items of financial statements are under, are or maybe understated or overstated? Tell specifically, are or maybe, because in that cases you have to run maybe when there is a risk. Where there is clear incorrect treatment, you will be sure now these are understated, these are overstated. Tell specifically. Any confusion, any question, please. Now, so these two things. So the latest past paper, I have taken that screenshots over here with me. You can open that. This is the latest past paper available on ACCA platform. March, June 2025. I will be analyzing it in front of you and its answer as well. The whole past paper today. This is the agenda. Before I proceed, you can ask any question you have or any suggestions. You have to All right, now, so when writing ROMM or business risk, there is a question from a student that can I write an extra risk, for example, according to the mark the requirement is for? No, you have not to write more than the marks allocated. This will be the blunder. If there are, for example, 12 marks and you have identified three accounting issues, four accounting issues, 3 marks each, or there are five in the scenario, you have identified, you must not write more than four. It will be blunder. You are wasting your time. You are wasting the time of examiner. You are mismanaging your remaining paper. Never do that. Write only what you think they are correct and you are certain about. Never write more than that. Is that okay? Never that. If there are 5 marks for procedures, write 5 procedures only. Never write 6. Write only those for which you are sure about. Never write more about that. Never do. I never recommend that. Okay. Now, so this is the, oh my God, it is not visible. Let me open it. The first screenshot is not visible to you people. Okay. So let me open it here on the, is it visible? Yes. But this first one is not visible. Just a minute, please. Is it readable for you people? Tell me. I just noticed here. I think here it is good. Now, so section A, the requirement is in front of you. Evaluate business risk, significant business risk, 10 marks. So how many business risk? 5 business risk, not more than that. 5 only you need to write, not more than that. Using only exhibit 2 and 3, evaluate and prioritize the significant risk of material misstatement. Use profit before tax as your benchmark. Now you see here, out of these 16 marks, 3 marks are for materiality, calculation and justification. Remaining 13 marks are for evaluation and prioritization. Prioritization has 1 mark. Okay, and now come next. Remaining are 12 marks, prioritization 1 mark, remaining marks are 12. So for 12 marks, you need to identify risk of material misstatement. Very easy, not difficult. Now, so it is 1st July, you are a manager in the audit department of Turlington and Company, a firm of chartered certified accountants, and you are responsible for the audit of Speedy Style Company, an unlisted family-owned company. Why this is an existing client? I have identified 2 points: unlisted and existing client. These both make this company's overall risk profile low for auditor. How? Risk profile low in terms of when it is existing client, it means the company audit firm have cumulative knowledge already. They have been auditing the same company. So there is no detection risk, means no issue at all. Okay. Now, unlisted company. Although we have not to discuss detection risk here, I'm just discussing the scenario that this information need to be grasped. Okay. So unlisted family owned company. Now this is increasing the risk profile. Family owned. Why? Because based on my previous experience, family owned companies may try to overstate certain things in their favor. They are not subject to that much laws and regulations. The company has a financial year ending 30th September 2025, and you are about to start planning the audit. Okay, here. To, from, subject, and date. I attended planning meeting last week. The company, the finance director, KH, of Speedy Style Company, at which we discuss the business developments during the year and plan for the future. I have provided you with my notes of this meeting and as well as some background information about the company from the permanent audit file. So, profit before tax is the basis for quantitative materiality. So, 3 marks, if anyone loses these 3 marks and doesn't secure these 3 marks, that person deserves to fail the paper. I'm telling you. If these 3 marks you cannot gain. Now, come here. So the next parts are here. During the meeting, we discuss the increased use of data analytics. Now, data analytics has become something. Don't know what is data analytics. What is the hype? Remember, audit procedures are same. You just have to change the technology. Tasks are the same. Comparisons, tracing, recalculation, from reconciliation of one account with the other. Procedures are the same, only tech has been changed. So please calm your nerves when you read data analytic. Don't get stressed. Now, so including more efficient and effective audit work to enhance the quality of audit, following discussions, I have identified that speedy style companies' inventory would be an area, okay, that will benefit from the use of data analytics, particularly when auditing their complex odd inventory system. Okay, you are requested to prepare information describing example of data analytical procedures which would beneficial in the audit of inventory for speedy style company. You are not required to run any other procedure outside of data analytics. Now students panic because they have used the word error once, one, two, three, four times in one paragraph. And you got panic. Relax. We will do it. Next, exhibit, discuss ethical and professional issues. From the, now you see here, the whole 50-mark paper, which I'm telling you. The repetition. Only one data analytics 6 marks part is a bit, they have changed something. Okay, now, so come next. So Speedy Style Company is an unlisted company which operates in a retailer as a retailer in the online fast fashion industry. Fast fashion, what we have in our mind. When I'm reading the scenario, I have two things in my mind. I need to identify all factors which cause risk to this business. Second, I need to identify risk of material misstatement. Fast fashion industry with an online presence in 12 countries. Okay. Speedy Style releases approximately 50 new products a week and uses social media marketing to encourage consumer to buy into new trends. And top selling products are reordered from the manufacturer within days. The company has growing customer base whose place order via either the company's website or app, which can be installed on a customer's mobile phone. The integration of the app account has been tested during the interim audit and was found to be working effectively. Speedy Style Company regularly run advertising campaigns to try to sell slow moving inventory before rapidly changing fashion. Now, what is it? It is business risk. How it is a business risk? They are in fast changing business where fashion matters a lot. But how? This is in our mind. Let us proceed further. Okay, this is becoming the basis of a point. We will try to find further points, further matter related to it. Speedy Style Company purchases its own its products from the suppliers in the country of far land, where labor costs are low. When products leave the suppliers' factories, ownership transferred to Speedy Style Company, and company is then responsible for arranging distribution to the customer worldwide. Speedy Style Company own distribution warehouse and use third party delivery networks in the 12 countries. Now, ownership transfer to the, this is inventory. So they say that when the product is dispatched from the supplier, this is something exceptional. This is something exceptional over here. Normally, what happens? When sale is recorded, we record normally when control is transferred. But here they are recording it at the time when the goods are dispatched. Quite strange. So we should keep that in our mind. This can be an accounting issue. ROMM. That how they record. So business model, various supplier in foreign manufacture, cloth shipped to Speedy Style warehouse. They own the product once they leave the factory. Third party delivery network, clothing to the customer. Okay, now come here. So online sales return policy. Speedy Style Company has a high level of customer returns with a return policy of providing the customer with a full refund if the clothing is returned within 1 month from the delivery date from the original. Now, this is risk of material misstatement. No refunds are provided for clothing after the 1 month return window. Last year, Speedy Style Company recognized 50% of final month sale, but in the year end, and this year management has estimated 40% of final month sale will be returned. Now, what is it? This is the problem. This is called business risk as well. How? When you are offering a full refund to a customer within 1 month. So within 1 month, fashion can change. Trend can change because fashionable clothing. Now this knowledge is being utilized. Because they are every month, every week, 50 new products they are producing. It means fashion is fast pace. So they might return the goods. And there may be the huge returns. And again, which will result in fall in revenue, reduction in cash flow impact. Now come, let us talk about its answer. How the answer should be written on business risk about it. So the business risk. Yes, returns. So they are offering full refund issue, which I call C. Now, you remember CEI, the framework. If customers are not satisfied on a receipt of product due to quality issue or even with a change in fashion trend, and it now how risk is arising. This is evidence. Commercial acumen. You are linking one information with the other. And there will be cost in processing the return as well. Even they are saleable at original price. So, but if clothes can be sold at reduced price, it will again impact revenue. Impact. So, developing the point, CEI. issue from the scenario. Now, two matters may be there. One, higher returns, fall in cash flow, fall in sale, decrease in profit. Second, and why it can happen? Because of the fast-paced fashion. Second, when the goods are being returned, they may not be saleable at original price. Even if they are saleable, okay, there is processing cost impacting the revenue. This is impact. Very important. Majority student write what students do normally. They write issue from scenario, which I called condition, and directly they write impact. They do not connect the dot in between. No explanation why risk is arising, how it may impact, how it get worse. So when you do not write here what is in between, you lose marks. Problem is there. Now, come next. So risk of material misstatement. I will talk about it later on. I have identified. The next is corporate structure. So currently, all of the executive directors' roles are performed by Hadith's family members, and board has no separate audit committee. Only one NED, who is a friend of the family, whose primary employment is a school teacher. The director of the Speedy Style company planning to list on the stock exchange in the next year. So it is business risk as well as it is risk of material misstatement. How risk of material? Now I will explain it how it is, but it can be discussed for 2 marks. So corporate governance is the issue. The issue is the whole family members are sitting there. Company is not listed, but still governance is an issue. Company operations are big. Big operations separate 12 countries. 12 countries they are selling. So it's a wide range of experience is needed. But only family is managing. No external experience over there. So inefficiencies in the operations, increased costs, decreased cash inflows, inefficiencies may be there. Now, the next point is how to discuss it as business risk. Come. Yes. Large private company. Skills required. I have told you add 12 countries their sales. But size of operations require that. No audit committee. So business risks, operations are not being managed properly. So 2 marks. So what will happen? They may not get listing. Operation may be disrupted. Cost may be high. So that's not difficult at all if you see. Now, how it is a risk of material misstatement? My question from you. Same issue. There is no audit committee. There is no oversight of financial statement preparation. So judgments and accounting policies related to financial statement, they are not being overseen by any independent body. So high risk of material misstatement is there. 2 marks point for risk of material misstatement if you discuss this one. So this is how you are telling the impact on financial statement preparation. In business risk, you are telling impact on operations, on profits, on cash flows. The difference. Now, brand expansion. Speedy Style has purchased 5 established online brands in the previous 10 years and utilized Speedy Style company's existing online sales, marketing, distribution department to integrate these purchased brands into their multi-brand business. You see, huge business. Before the year end of September 2025, Speedy Style Company is expected to complete the purchase of brand of Car Company, a high street retailer of furniture and homeware store which is facing closure due to poor sales. This will be the first time that Speedy Style has bought a brand which was previously only sold in retail stores with no online presence and is part of, you see here, first time purchased a brand. Now, this is a clear business risk. Purchased of Car brand. And next, the acquisition of brand is expected to cost 3 million amount involved. The purchase of Car brand is in advanced negotiation with the director of Car company. In accordance with the previous purchase, the Car brand will be held at cost and not amortized. Now, this is a accounting issue. Significant marketing expenditure. There have been newspaper articles that Car company director have overpriced the brand. Now, this brand was closing business risk. They purchased a brand which was actually failing. Issue. And it was their first purchase. They say that. And they had the brand has no online sale. So it means there is high risk that the customers of brand may not transfer to online. First of all, this company is online and is already not performing well. Already news article saying it is overpriced. So it may become a failure for the acquisition. And actual profitability and revenues may fall of the business. Let us discuss how to talk about it. Car brand. Yes. Significant issue, condition. Now, what is the evidence based impact? It was, yes, previous customer may not transfer to the online and hence acquisition may not be successful. Impact. The risk is a high severity because it is already not performing, failing, so reduce chances of success. Now, the next point is come to the question once again. Now, how this is risk of material misstatement, MTI. Materiality we will discuss. It is material or not. 3 million. What is treatment? What IS 38 says? They are not amortizing it. So whether the brand is indefinite life or definite life, purchase brands, normally they are definite life. What IS 38 says about that? And if they do not amortize, what will happen? How much misstatement? Which items? Got it? Now, so the next is distribution licenses. In my 20X5, a large container ship which was carrying Inventory owned by Speedy Style Company with a value of 840,000 became stuck in a transcontinental ship canal. Okay. The clothing on the container ship was due to be delivered in the June, but is now expected to be delivered at the end of August. This caused a delay in shipping Speedy Style Company being able to distribute the goods. Clothes for the short summer season, June to August, affecting 30% of the online market. The finance sector is optimistic that the clothing, which have been extensively marketing ahead of the proposed launch in June, will be saleable at full price and made no write down. This is risk of material misstatement as well as business risk. Risk of material misstatement IS2, MTI need to be applied. We will talk. How it is a business risk? It is shipping delay in the shipping. And when it was delayed, the goods, how many months? 2 months. To be delivered in June, but now at the end of August when the season is going to end. So there'll be huge negative impact. Fast fashion industry. See, impact two types of impact. First of all, fast fashion industry. Fashion it may become, when the goods arrive, may become out of fashion, may not be saleable. Customer may not like it because it might be out of fashion. Sale may fall. Second, season. They were related to the summer, and summer is going to end in the end of August. 30% of online market. So when the goods arrive, they may not be saleable. Although the market manager is saying, finance sector is saying it may be saleable, but not providing the customer the goods when needed in the summer season, it may upset the customers. Reputation damage. Customer may purchase the goods for that clothing for that summer season from competitors, leading to fall in revenue. You see how practical it is. I am not discussing anything generic. You have to discuss the scenario, do the analysis of the scenario, then you get marks. Next, a prominent news organization recently published an article revealing that the poor working conditions of employees in Duff Company, a clothing company which exclusively supplies Speedy Style. Poor condition of employees. Now, social media it is spread. Business risk, huge. How it is a business risk? Two reasons over here. First of all, that the reputation will be damaged, that the supplier is unethical, poor condition of the employees are there, the factories which are supplying to the Speedy Style Company. Second, very important point is they supply, the matter is heightened, gets severe. How? Because they only supply exclusively to Speedy Supply Company. It is a big issue become more grave and severe. What will happen? So customer may get upset, may become reputation damage, and sale may fall, may not buy from the company. Possibility is there. Now, so come here. Supplier working condition. Working condition and pay of the worker. So this is C. This is impact and E. And again, compounded by the fact factories exclusively supply them. So therefore, risk will increase and further impact. I hope this point is clear to you people. Now, just a minute. How many points we have identified business risks? One business risk. Yes. Sorry. Here is the question. Here is the question. One business, one, two, three, four, and five done. Five business risks are done. Need not to talk about more. Please save your energy in exam. Done. Now come to the next part, risk of material misstatement. So I want to just go to the question. Yes. First of all, materiality. You need to discuss materiality based on profit, 5 to 10% of profit. How to discuss? Come back to the answer. So materiality has to be discussed like that. This. It has 3 marks. Overall materiality is based on profit before tax. Benchmark 5 to 10% of profit. Now this is calculated. Calculated. How much is the profit? The profit is here 8 million into 10% is equal to 800,000. And 5% we know that is 400,000. That's it, simply. So this is how it need to be written. Now the mark which normally student lose, now you have to choose one of these. Which one? 400,000 or 800,000? One you need to choose and justify the coming paragraph. And justification must be from scenario information. Come to my notes where they are. Yes. Sorry. Smart notes, here they are. Risk of materiality. Yes. If you want, you can take screenshot. Materiality should be set at lower threshold when it is a new audit client. Lower means here 400,000. There are apparently control weaknesses, incorrect treatment, too many uncertain accounting estimates, management bias. And here in these questions, there is one incorrect treatment of we have identified. Which one it was? Potentially brand. Second, inventory. They may not have management bias, maybe there because they are going to be listed. Okay, so the inventory they may not have not written down. They think still after season it may be saleable. Now, so very important. So you need to find such point to justify your answer. Now, so benchmark, this is an existing client and we have cumulative knowledge. Okay. However, the proposed brand purchase and future listing increase the risk. 2 points you need to find from the scenario minimum. And hence, this is justification. This is the reason initial benchmark is here. Even after attending this class, you are not writing materiality and discussing the way I'm telling. You should not expect the marks from the examiner. I'm telling you. You should not expect. Now, next proceed. Further, please. So now risk of material misstatements, one by one, we need to talk about. Yes. So risk of material misstatement. Here it is. Sorry. So come back. Let us start with this inventory. If I say MTI, what is materiality calculated? 400,000. Inventory valuation of 840,000. That is basically disturbed inventory. Okay. So this is above the materiality threshold. So hence it is material. So what IS2 says that inventory should be valued now. So M, now treatment. What IS2 says that inventory should be valued at lower of cost and RV. Now come to the scenario. Apply to scenario. The delayed inventory has the risk to obsolete, out of fashion. May not be because when they are reaching season will also be end of season. So may not be saleable at original price. And selling price and NRV may be less than cost. Inventory may need to be written down. But they have held at cost. Okay. So treatment applied to scenario. They have held at cost. So the risk is that inventory may be overstated. And now, this is called professional skepticism. This may have been because the company wants to be listed in the stock exchange and they may not deliberately written down. Hence, total assets and profits may be overstated. Come to the answer of the question. Come to the answer of the question. This part, inventory. Here it is. Materiality M. Treatment applied to, you see, application to scenario. This is huge. This is impact. Sorry. Impact. This is also impact. Impact. And yes. Fast moving nature. Same point. Seasonal clothing. Building the point. So much likely to less than original price. So risk is that achievable sale price will be much less than original intended. So NRV may be less than cost, need to be written down, but management. Now this is the discussion you need to make because this all data is available in scenario. If you do not do, you actually get damaged. Now further scaling the risk. This is called professional skepticism now. That they are going to be listed, more attractive fund statements to investors. Hence, they may not have written down. Now, come back to the question again. So, risk of material misstatement second. Brand. So, I told you MTI. I have explained it. Come to the scenario, to the answers again. Yes. First of all, materiality M. T. What IS is saying requires that intent. Now, this number of IS is not required in exam. You can say IFRS says that if you forgot the number is not mandatory. Name of the IFRS is not mandatory. It has no marks. But if you write incorrect, then marks will be deducted. So stay safe. So, intangible assets with indefinite life are tested for impairment. Okay, where there is indicator of impairment, such as fall in demand. An asset is impaired when the recoverable amount is lower than carrying value. So, okay, right here, impairment. So, impairment impact. The purchased brand, this is impairment, here below intangible asset. IS 38 says that intangible has asset has indefinite life. Means there is no foreseeable limit to the period over which its benefits will inflow. What IS says? T. You can write M, T this. So this hard to justify a brand name. So they should have amortized the brand over the expected life, but they have not done it. So impact, incorrect treatment. So intangible assets are overstated and amortization costs are understated. So 3 marks. Even if you ignore it, you write this materiality and directly write it. 3 marks are confirmed. You need not to write this all. This additional write up means it will be for 4 marks minimum total, 4 to 5 marks. It happens when one issue you can discuss more than one aspect. So its marks are increased from the 3. Okay, now, next. The next is, yes, corporate governance and refund of the customers. Refund liability. First of all, we will discuss the issue. Okay. And what IFRS 15 says that estimated level of returns and refund liability should be recognized and excluded from the cost of sale. But they have reduced here refund liability from 50% to 40% of final month sale. And there is no apparent basis of reduction. No justification. Risk is that this refund liability may be insufficient to cover the potential refunds. Now come here. Refund liability. Yes. Here we are. So what is the issue? So because amount is not given, so materiality has not been discussed. Okay, right? So what IFRS 15 says? They say require liability. What IFRS says? Treatment. Applied to scenario. So they have reduced it, which may be incorrect. It is area of judgment as well. Management bias may be there. And they might be doing list because of the potential listing. So refund liability may be understated and profits may be overstated. So now corporate structure. The other point. Speedy Style Company has a substantial revenue of 140 million. Unlisted, run by family members, oversight, without the oversight of audit committee, with one NAD, no professional experience, increase the risk of material misstatement file statements. And very, very important point. This will bring you one additional mark. This is demonstrated by incorrect treatment applied to delayed inventory transaction. So hence, other areas of financial statements may not be scrutinized and challenged. Now, the last prioritization you see here. The risk of material misstatement has been prioritized with regards for estimated magnitude, amount, and likelihood. Impairment brand is the highest quantitative area, 3 million. So they have placed it first. Impairment of brand, the first discuss you see here. Then comes the amount involved is 3 million. This inventory amount is 40,000, second place. Then Return from the customers, although not quantified, but it is 10% of 1 month sale, maybe amount. Then comes the corporate structure and so on. So inventory valuation is also considered a significant risk because of obsolescence, risk of obsolescence. The decrease in sales return provision is of lower quantitative amount. So it is a have lower risk of misstatement. So 3 to 4 points you have discussed here. Why first one, why second, why third, why four? Enough. Any confusion? Any question so far? Tell me. Any question, please, before I proceed. All right. So I will take a 5 minutes break. Okay. 5 minutes. I'll be back and I will continue the remaining part of question one. Okay. Just 5 minutes. I'll be back. Now, next. So the next question was on the data analytics, right? On the inventory. An inventory issue is, we know that inventory is delayed, lower of cost and NRV. That is the issue. Okay. So now the point is, let us do the analysis of the procedures. So data analytics procedure, you will tell me how it is different from recalculate the inventory balance to ensure inventory summaries are correct. How it is different from the manual procedure, right? Run a report. Yes, this is how different of the highest value items of inventory and verify that sale prices are in excess of carrying amount. Come here. Match purchase orders to invoices and payments. Invoices, payments. To identify any error in the value of inventory at cost. So verifying the in purchase invoices and payments to verify it is correctly recorded at cost. Now, yes, analysis of sales promotions, promotions being offered, discounts offered, and comparisons of reduced sale price to the cost price to ensure inventory sold for lower than cost is properly written down. Written down. This is analysis because analysis is there. Graph may be there, for example. So valuation of inventory by age means you run the report to determine any inventory which is now out of season and which may not longer be sold at full price and adjustment is required. So again, it has nothing to do and identify any manual journal posted to inventory and select a sample to discuss with management that journal. So 4, 5, 6 procedure I have discussed. Analyze revenue trends by product and region to identify slow moving inventory for which written down may be required. So you see here 1, 2, 3, 4, 5, 6, and 7. These 7 procedures, if you pick, they are almost the same as that of the regular procedures. Minor adjustment. Here you run the report, you do review the analysis. That's it. Nothing new here. But each procedure must have some action, some source, some purpose, and it must be scenario specific. That's it. Clarity. Leave it simply. What is procedure? Which action to be done? Why to be done? How to be done? Simple is that. That is procedure. Now, the next is ethical issue. Exhibit 4, ethical and professional issues, 8 marks. Exhibit 4, sorry. This is the exhibit 4 in front of you. 8 marks are here for the ethical issue. Just Read it once. Then I will be discussing it with you people. Read it once. Be quick. During the planning meeting, the finance director KH stated that the family is trying to increase the knowledge and spirit style company's board of directors in advance the proposed listing in the next. In order to do this, Hadid's family would like to recruit one of your audit partners to serve as NED for a 6-month period. Now, KH has also requested that your firm assist them in recruiting new non-executive board members. Okay, right? KH has offered all members of Tullington Company's audit team member a 50% discount on Speedy style products to thank the team for their loyalty. The audit team has been retained for now four ethical issues we have identified. One, two, three, and four. 8 marks. There are 8 marks available. So first of all, they are offering the non-audit partner to serve as non-executive director for a 6-month period. Now, which ethical threat it may cause? Which ethical threat it may cause? This matter, it may cause number of ethical threats. First of all, self-review threat. Because how? Now students need to explain how. How is very much important to discuss. That he will be able to monitor and oversee financial statement being non-executive director. And the audit team, because their audit partner is sitting over there, they might not be questioning his work. And if engagement partner, he is going to be appointed as director of the company. So this threat is very high. Very high. One. Second, it can be create, it can self-interest threat. How? Because he will be working over there, he'll be getting monetary benefits, which may be lucrative. So that direct audit partner who will work as director, he may not remain independent because he will be deriving benefits from there. Self-interest threat. Now, issue, what is the issue causing the threat? What is the threat? Name threat. How the threat will arise? You have to explain how it will impair objectivity. Just like that, I told you that they will be monitoring the financial statement preparation, and audit team will be going auditing the same financial statement and may not question that. This is how explanation should work. That how it is self-review threat. And self-interest threat, if you're calling it, how it may arise. How it will impair auditor objectivity? Because he will be getting a fee, and that may be substantial amount, may no longer independent in his judgments as audit partner. And if the same person who is engagement partner that is going to be appointed as the non-executive director, this threat will be huge. Now, what is the safeguard? Now, safeguards to be discussed. What code says? And what should be done here? Note down this point. What code says? That is rule. So here what they should do. Normally students miss one of these two. They either say right enough what code says, or they say what they should do. Both we need to. Code says that employee of audit firm should not act as director of audit client. Not allowed. Code does not allow. So therefore, Turlington Company should not provide a partner to serve as NED of Speedy Style Company, even it is for limited time period. Enough, 3 marks. 2 to 3 marks enough. You will get over here. Second point. The next is they are going to recruit recruit new non-executive director for us. Identify. So which is the management responsibility? It will be like that, assuming management responsibility, and they are prohibited to take this responsibility. Code does not allow that and any audit firm to assume management responsibility for client. So they should not do this. Now, the next point is 50%, yes, discount being offered on the products of Speedy Style Company. It is a gift and hospitality gifts. So, and this, if this gift is accepted, it will create self-interest threat. An audit team may be obliged by it, by this gift, as the Mr. Hadid said. Mr. Hadid said that they are accepting, in loyalty, for the loyalty of the team. So the team may not be able to question them. They may be, we can say, obliged by the discount. And if the discount is of substantial amount, what does the code say? The code says gifts will not be accepted if they're accepted only if the value is trivial and inconsequential. So here the firm should assess the value, and if it is of huge value, it should not be accepted. Now come to the here. Come here. Discount for the, yes, see here. So what is the issue from the scenario? They have offered issue. Which threat, self-interest threat, will arise? How it will impair objectivity of auditor. Very important. So what the code says? Safeguard. And what they should do, the firm. The first ethical issue, partner to be appointed as non-executive director. So what is the issue they have requested? So number of ethical threats. Self-review threat arises. Name the threat. Issue, name the threat. How self-review threat will arise. How it will impair objectivity. They may not be able to question them during the audit work. Self-interest threat, how it will arise. How it will impair the objectivity of auditor. Now, so what does code says? Ethical code and what they should do. Enough. Yes. The last point was here. There are 7 year services. Team is working. Familiarity threat arises. Familiarity threat arises. That the whole team has worked for a long duration, unchanged. So they may have close relationship, friendships with the staff and the work of the speedy style. They may have lost skepticism. So they may be, and hence misstatement, and they may not be challenging the accounting treatments. Possibility is there. So now, so what is a safeguard? This is unlisted company for the time being. So there is no rule for the lower staff that how often they should be changed. Okay. So, but if the independence is impaired, they should be changed. For audit partner, there are the rules. In excess of 7 years, in the case of listed company, if a partner works, they should be rotated. Okay, right? So here the staff should be rotated. Simple is that. No rocket science over here. Students, I think that's enough for today. Okay, so the remaining two questions are there, which I'll be discussing in tomorrow's session. And you can send me your queries as well, questions, if you have any specific questions. Okay. So I will be answering your questions as well, discussing. So remaining two questions will solve tomorrow's session, same time, and we will do it. Any question, please? Right now. Right now, any question, please? All right. God bless you. See you. Take care. Goodbye.